we got asked only a couple of days ago to speak about United Health, and Steve and I would we talked about it ourselves probably 3 or 4 days previous. So I think the last time we spoke about it, Steve sent me a message and he said, "Oh my God, look at United Health's price," and I think it'd fallen about 16 or 17% when I looked at it at that point. So we thought it'd be worthwhile just talking generally about it, but also I've put together a sort of a quick timeline of events that happened, and also had to think about where we are currently. So let's see what you think about this. So yes, strange period for United Health Group, marked by this significant share price decline. Um, yeah, price is down by about 50% since its peak in 2024. I'd say this fall is attributed to sort of a number of factors, which have gone from taking a company where you could almost have nailed on certainty about how it was going to do to quite a large sense of uncertainty around the company's future. So there were initial concerns last month around April. The company reported lower than expected first quarter earnings, also revised its full year outlook downwards, citing things like increased medical costs, particularly within its Medicare Advantage business, and some unexpected changes in its Optum Health members. And then just amplified these concerns again in May 2025. The company abruptly announced that its CEO was leaving, Andrew Whitty. Then withdrew full year guidance altogether. So yeah, the unexpected change in leadership, lack of this financial outlook, has spooked investors, I would say, Steve, and that's led to this price decline just continuing to go down. But to add to that, Steve, reports this week from the Wall Street Journal have emerged of a US Department of Justice investigation into United Health for potentially Medicare fraud. The exact nature of the allegations remain unclear, but this news has obviously only served to further erode investor confidence and certainty. Yes, the company has actually since denied that it's been notified of any such criminal investigation and has stood by the integrity of its Medicare Advantage program. They essentially put out a note today, I think it was, or yesterday, saying this is essentially fake news. And the Wall Street Journal actually have a bit of history of doing this just in the last couple of weeks, Steve. There was a piece about Tesla looking to replace Elon Musk. That turns out to be not truthful either. So interesting kind of tactic that they're going down here. So to give you the timeline then, so we start in December 2024. That was the last time we got decent guidance. They basically said 2025 performance outlook is going to be affirmed. Revenues of about 450 billion to 455 billion. I mean, that's the size of the company we're talking about. They said that earnings would be about $29 to $30 a share. And on the 4th of December, so just a few days later, a top executive is killed and shot dead. So we just fast forward slightly to January 2025. United Health has reported its full year results, showing revenue growth, but actually an increased medical care ratio cost. But their 2025 outlook is reiterated again, which is their longer term guidance. Fast forward to April 17th, Steve. United Health reports its first quarter 2025 financial results, quite short of expectations, actually. They lowered their full year earnings guidance due to higher than anticipated medical costs. They said that the costs were in Medicare Advantage business and the changes in Optum Health described earlier. The stock price experiences its biggest one-day drop since 1998. Price fell by about 22% on the day. May the 7th, 2025, Steve, we got the ambulance chasers lawsuit filed by investors alleging that United Health had misled them following December's 2024. They basically said that this wouldn't affect results. And then just one quarter later, we saw some kind of difference. So on May the 13th, immediate departure of Andrew Whitty for personal reasons. The former CEO, Stephen Helmsley, is reappointed. The company then withdraws its full year 2025 guidance, citing the same reasons as the previous guidance revision and the recent CEO change. The stock price falls sharply again, about 18% on the day it finished. So May 15th, 2025, that's when we get your Wall Street Journal. Unnamed sources claiming the probe has been underway since the summer of 2024. United Health has obviously denied these reports, but the share price plunged again, Steve. 5-year low. We're now down about 19% on the day. So as we stand today, share price remains under pressure. It's actually bounced back a little bit today, Steve. It's up 5, but it's lost about 50% of its value since it started drawing guidance, pulling guidance. Sorry. So analysts are offering mixed opinions now, with still sort of some of them pointing to long-term value, whereas others are wind chasing and taking the price down, acknowledging that the current certainty, or the current level of certainty is low. So yes, it's continued to fall, multi-year lows, pretty significantly impacting the Dow Jones Industrial Average as well, Steve, because United Health is one of the major components. So despite analysts maintaining a set of fairly positive long-term outlook, I think the immediate future is uncertain. I think investors need a bit more clarity of the DOJ investigation, and the company's revised sort of financial strategy is obviously under question as we go under new leadership. But where are they trading today? So in my eyes, I've ran a reverse DCF on them. I think that's probably the best way of figuring out where we are today. And I use standard terms. So I did 2.5% terminal growth rate, which seems fair on a US business of this kind of size. I did a discount rate of about 10%. No dilution, no buybacks for the next 10 years, just to keep it nice and simple. I've also used the lowest free cash flow number that they've generated in the last 3 years to try and add extra safety for us. Any guesses, Steve, on what the model spits out as what growth is priced in here for the annualized, obviously, over the next 10 years? Any guesses?
Oh, over the next 10 years, 2.5.
It's actually less than that. So you basically, from here, you have to believe that they're going to grow their free cash flow to around $24.5 billion by year 2035. That's just 1.5% a year. And as an extra, by the way, their trailing 12 month is already above that. It's about 24.8 billion. So I don't know, Steve. I think this is really interesting here. I know we shipped Pfizer out for Novo in my portfolio, and I must admit, flat on Pfizer loss on Novo to switch to United Health actually feels like something would be a sensible move to do. I think these are dark clouds I can see through, Steve. I think it's what I would describe as a wobble, and I think investors have overreacted. But that could be entirely wrong. I suppose it depends on how this fraud case goes. Steve?
I'm not surprised that's where you kind of come down on this, knowing what we've had with similar conversations recently about a similarly beaten down, though in pretty much no way similar type of business. The only way in which it's similar to this other business is that I think both have some meaningful competitive advantages, but that covers a lot of things. So when I think about the conversations you and I have had about Vistry in recent weeks and months or so, that's another dark clouds that you can probably see through type thing. They have their own internal issues going on, and they have definitely had their own internal issues going on. They may well be short-term or temporary in nature, and if they are, then the stock, I think it still looks cheap, to be honest, actually, Vistry at these prices. But it certainly looked cheap at the prices it was trading at kind of last Christmas, which isn't as long ago as it sounds, about 6 months ago. In the case of that one, I have currently stayed on the sidelines because I've made a rule for myself that I'm staying out of the house builders while they're being investigated by Competition Market Authority. And the longer that goes on, the more tempted I am to try and ignore it. But the more I think, oh, don't. If you buy it now and it turns out there's something going on there, you'll be really cross at yourself. But back to United Health for the moment. There's a similar sort of dark cloud over this that there's a threat of a rumor of a possibility of a investigation into them, basically. And I'm not sure quite what to make of that. Parity of reasoning appears to lead me to think that I ought to stay out of it as a result. Parity of reasoning would equally lead you to think, go for it, because you're less concerned about the CMA than I am in the case of Vistry. We see the same thing, we just view it differently, and I don't think there's anything the matter with that. What I can see, as with Vistry, is some quite clear kind of competitive advantages for United Health. So they kind of have two parts to their business. They sort of have the services bit and the insurancy type bit, and I was reading they have a pretty much leading loss ratio. They are that rare thing, which is a really good insurer. And they are a really good insurer in an area that people need as well, which is enormously valuable, right? They have scale advantages. They actually have pretty good data, which is probably connected to why they do so well underwriting wise, but they achieve better margins than kind of most of their competitors. They have some kind of good focus on bringing down costs and so on. They are, I think, one of the best technologically advanced insurers as well in the kind of Medicare space. And when you look at all that stuff, there's a lot to like there over a kind of long term if they come in fairly well out of all of this sort of thing, basically. So I can definitely see the case for kind of liking it here. I'd never got round to looking closely enough at it because I'd long thought the US healthcare system was essentially too much of a mess for me to go poking around in. But I'm not convinced that's necessarily something that, as I continue to talk about these things and continue to think about these things, learn about more businesses, learn about investing, find out more stuff about the US and how it works and so on, as something I ought to think is necessarily beyond my kind of competence levels here. And if I do get to thinking that, it would be kind of well worth a look. It's just, this is the opposite of 3i that I was talking about before. It's a stock the market doesn't seem to want to buy in this situation for whatever reason. It's had some understandable bad news, has sent stock price lower to some extent, but it is very much kind of sticking down for the time being. And you get the impression that, well, with the way as you point out, the low growth expectations built in there, this won't last forever. Either they will start to do something with all the cash they start generating, or they will their stock will start to re-rate higher as long as this thing goes away. It doesn't even have to completely go away. I think it just has to not be as bad as people are thinking it's going to be, which is, well, potentially a strong position to be in.
Yeah, so in my head, I've got the two sort of things in my head: voting machine, weighing machine. United Health is currently a pretty hated company. That's essentially the essence of a voting machine. Weighing machine is the long term prospects of the stock market. So if I want to make it as simple as possible, we'll do it Demoderan style. We'll just pull out free cash flow and say to ourselves, if the company is being valued on free cash flow, let's keep it as simple as that. If I look 10 years back, free cash flow was half of where it is today. So they have essentially doubled free cash flow in the last 10 years. I don't need them to double free cash flow over the next 10 years for that valuation to be, from today to be worth what it is. I just need it to continue as it is currently doing. And if it gets worse from here, we have a couple of period of, where the CEO sorts it out. All I need it to do is to get back to where it was currently for this valuation to still make sense for me. So there is not a lot priced into this at all. So look, rather than overcomplicating this one, I'm trying to keep it dead simple. I think we could go. It's a bit like when we look at our drug stocks and we think, we can't see the value for the pipeline of trying to understand too complex of a thing. At some point, the deal becomes too good, and you can walk away from the deal happy that you've got some stocks and you can learn a lot more about the business when you walk away. And that's generally my intention with this. I'm not trying to keep it too complex. I'm seeing a bargain, and I will pick that up and I will figure out the rest in the coming months. I worry that this opportunity will get closed up quite quickly, Steve, because I think people will slowly remember that it's a fantastic business, and also it's quite normal in the developed world to absolutely despise your insurer. That doesn't make it a bad investment, Steve. And I think that's pretty much where I'm going to land.
I think that's not a bad place to be landing, to be honest. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.